Hi guys, it's Bullish Villa Academy here again. So in today's class, I'll be sharing with you the trade I took this past week, and I'll be walking you through the reason why I took those trades. Now this past week, I took just 4 trades. I traded on Monday, on Wednesday, on Thursday, and on Friday. So without much ado, let's dive into a trade. Alright, so I traded Euro USD through because that was the only place where I got confirmations on where I saw entries for. So alright, now this is the Euro USD pair, and this is on 15 minutes time frame. So I started from on the 15th, which was on this date. Okay, so let's go to the 4-hour time frame to see the overall view of the chart. Just like we know, we make use of the top-down analysis. And what does the top-down analysis say? It says that you start from the higher time frame to have an overview of the direction of the market, and you come down to your lower time frame to look for your point of interest for your entry, so that you can take your trade, whether it's going to be a buy or it's going to be a sell. So from the higher time frame here, you see that we're having a bullish market. So this 14, this 15, and the 15 here. Let me come to the 1-hour time frame. So already the price action was already giving us, a bullish overflow, you can see. So we're having from here, you can see higher highs, low, and you see high, low, and high. So this was what we had as at when the market closed. I anticipated that this trend was going to continue. So on the 15th, when the market opened, 14 night to 15 morning, so I was expecting that the trend was going to continue in an uptrend, you understand? So I was looking for buying opportunities. So since the overall trend was an higher trend, was an uptrend rather. So what I did, I came down to my 15 minutes time frame. I usually enter my trade on 15 minutes, so I came down to 15 minutes to look for buying entries, no point of interest. So this was on the 15th. So you can see what we have here. We have the market close here as at Friday, then open on Sunday, and we had a push down, push up, push down. You can see. Okay, so the trade I took the trade from here. Can you see? So I took my entry was at this point, and the reason why I entered at this point was I was expecting a buy. I was expecting a bullish trend. I was expecting that the bullish trend was going to continue, and this was where the market ended on Friday. So now this uptrend was able to clear or take out this last high here. We had a higher high here, so we had, look at what we had here. Look at what we have here. Up, a push, a pullback, impulsive correction. Can you see? Then we had another impulsive. Then we had a correction here. So this correction here is almost 50%, of this impulsive move. Okay, let's make use of our Fibonacci to confirm. This is our Fib 2. So we can say that if we are using our Fib 2, so we want to know where the end of the retracement falls. So if we are looking at our Fib 2, we see that this is 0.5, which is the midpoint of the 2. But you see that the retracement has fallen below it. And you can see we got to 0.61 before we had another impulsive move. Can you see? And like I explained in my Fibonacci 2 video, if you have not seen that video, please, I want you to go and watch it. I explained everything about Fibonacci, how to make use of it, in catching trades on the charts. So I want you to go back and watch that video over and over again until you understand it. Watch it and also backtest it. So you can see, and like I said in that video too, you buy from discounts, you can see. So you make sure you're always buying from discounts. You understand? So when the price got to 0.5, it came down, got to 0.61, then started moving up. You understand? So always wait for the retracement to get below 0.5, which is discount. So once you get below, then you can actually take your buys from there. So when I saw that it has gotten to 0.5 and we are already having a value up. So when I came to the charts, the move that started going up already. You understand? So I couldn't enter early. So I entered at this level here. Please. I entered at this level here. I entered late. Yes. Because I don't want to miss that buy. So I entered here. And you can see that there was a deep pullback again. You can see. Markets will always be markets. We can only predict. So you can see that even when I took the buy from here, we had a deep pullback. It almost took me out, but then started going up back. Can you see? It almost took me out. So there was a deep pullback. But thank God it didn't take me out. Then it started rallying up. Can you see? So you can see that even when it got to 50% here, there was an impulsive move, and this impulsive move was to deceive early buyers, just like the way I was deceived. Then it came down and it took out this low. Can you see? Came down to take out this low. Can you see there before going up? So a lot of people stop out could have been taken out from here. Can you see there? Then started going up. So liquidity was taken here. So and rally up. So I was still in the trade, thank God. And then it was a win for me on this trade. So on this trade I made 2.2 how on this trade. I made 2.2 how on this trade. So that was the trade for on the 15th. Then on the 16th, the market was also bullish, but the market took off on time, so I couldn't enter the trade. When I got to the chart, I think the price was already around this area, so I didn't even anticipate that there was going to be this retracement. So when I said that I came late, not that I came late, I was up at around 6 a.m. 7 a.m. but the market had started moving already. So, and I didn't wait for the New Year section. So that's on Tuesday. I didn't trade at all. It was a free day for me. But I was not really happy that I didn't trade because I always want to trade every day. Then on Wednesday, you can see what we have here. So since we are still having the bullish overflow, I was anticipating that the buy was still going to continue. That is, the bullish trend was still going to continue. Can you see? So on this day, can you see? This was on Tuesday, on Wednesday rather. So the market opened, you can see we're having a retracement. So I decided to take a buy here. Can you see? So I decided to take a buy here. And the reason why I decided to take a buy here was this was the last low. The low that took out this high. Let's listen attentively. This low, this was the low. This was the low that took out this high. So this was the last low. So I was anticipating a reversal, then, a push up. I was anticipating a correction, then an impulsive move, so that I can enter my buy on this trade. You understand? So when the market opened, we had a reversal. Can you see? We had a reversal. Then we had a push up, but this push up didn't take out this last high. Can you see? We had a push up. So we had a reversal. Can you see? So we had a reversal. Okay, let me start this way. So when the market opened the next day, can you see? This was where the market closed here. Then we had a push up, but it didn't take out this high. So I think I didn't take note of this. We had a push up, then we had a reversal that took out this last low. Can you see? We had a reversal here. So when we had a reversal, this reversal was like 50% this impulsive move, previous impulsive move. So immediately it was 50% and started giving us a bullish trend. I took my buy from here. So this was the reason why I took my buy here. But unknown to me, you can see, it just came down and took me out. So I was taken out here. I was taken out on this trade. So I lost 1.7 hour on this trade. I lost 1.7 hour. I actually over leveraged. I was not supposed to lose more than 1 hour, but I lost 1.7 hour. So that was what happened here. So I was taken out on this particular trade. So I took my loss for that day. Then the next day, I also took a loss. Okay, the next day wasn't a loss. Okay, let me explain to you. So now, we had so the next day, can you see what we have in here? So I was anticipating that the buy was going to continue. Whereas the market decided to sell. The market decided to sell. So I took a buy from here. Took a buy from around this place. So I think I'm not capturing this thing very well. So the reason why I took a buy from here, there was a rejection candle here. I think the buy was from around this place. So okay, this thing is not placed. I didn't really place this thing over there. So there was a rejection. So because of this liquidity, this liquidity sweep here, and we had this bullish candle here. So that was what led me to take the buy here. So I took the buy here, but the market took me out. The market took me out. Then I think I waited for another opportunity. I waited, although I entered the trade late here, you understand? So I waited for another opportunity. I just started to, I took, like, I actually scalped here. So I took some trade there. I took some entry, like, and so, and then they gave me some profits. So at the end of the day, I broke even. So the loss I took here, I was able to recover it back here. So I broke even. So I just saw an opportunity here. So I just started to, okay, let me take it buy. I saw an opportunity. So I saw that the price was going up. And when I saw the candlestick, this was a Marubozu candle. And if you understand Marubozu candle, you can see this is number one. This is a Marubozu candle. This one here. So a Marubozu candle is a candle that tells you how strong the trend of the market is. Understand? And it tells you that the trend will continue to happen for a long time. Yes. So number one, this candle here now, this one, let me circle it. It's a Marubozu candle. This can either be a bullish or a bearish candle. See this candle now. This is a Marubozu. So this one too looks like also a Marubozu, but it's shorter. This one too is a Marubozu. And you see the trend continued. So whenever you see candles like this, it's telling you that the trend is very strong. That is the bullish or the bearish. So look at this. So now this is a Marubozu candle too. You can see this is a sell, and you can see how strong the trend is. Can you see? Look at this. This one is even so long. Can you see here? So whenever you see candles like that, it's telling you how strong a trend can be. Understand? So these are examples of Marubozu candle. So when I saw that candlestick that day, I felt that the buy was going to continue for a long time. So I quickly entered. Although it was late entry, so I just entered. I entered like multiple positions. So at the end of the day, I was able to, I was able to recover back my loss. Although it's not advisable. You understand? So I actually over leverage, but thank God it went my way. You understand? So that was that. So on the 18th, it was break even for me. Then on the 19th, on the 19th, the market was, there was no much movement, but I took a scalp, which I really over leveraged, and I lost I think I lost 1.7 half on this trade. So I think it was around so I was trying to scalp. Yes, I was trying to scalp, and it didn't go my way. So I was trying to scalp, and it didn't go, and that is one of the disadvantages of trying to force an entry. Now, what really made me lose money on this day was because I was just looking for an entry. I just wanted to take a trade, even despite the fact that I saw that the market was really ranging. It was so slow. You understand? But yet, I just wanted to trade. And at the end of the day, I lost money. Even I lost more than I was supposed to lose. I risked more. So my lesson to you here is that don't force trade as a trader. Make sure you don't force trade. If you see the way the market is, if the price is not coming to your entry, you don't have to force it. It's better you don't trade than for you to trade and lose your money. And that was what happened to me. So it was so pathetic. I was not really happy. So that was how my trade went for the week. So I have my trading journal, which I'm going to show us. So this is my trading journal, and I was able to do a video on my trading journal too. So if you have not seen it, I'll advise that you go to my YouTube channel. It's there. So this is my YouTube channel. So here's the video. So this is the 5 key elements of a winning trading journal. So I was able to explain the meaning of trading journal, the importance, and what you should have on your trading journal. Although people have a lot of things, but for me, I have just 5 items on my trading journal. So, and for this week now, this is what I have so far. From on the 12th, 15th, 17th, 18th, 19th. Okay, on the 12th, 15th. So on the 12th, it was a broke even. Then on the 15th, I made 2.2 half. Can you see? Then on the 17th, I lost 1.7 half. Now my risk management was a no. How I miss risk management? That means I didn't follow my risk management because my loss appetite per trade, I shouldn't be risking more than one half. But you can see that I have 1.7 half, so my risk management was a no. Then on the 18th, I broke even. Then on the 19th, can you see I lost 4.1 half? Imagine I lost times 4. So I over leverage it, and you can see I lost 4.4. And if you now look at the overall results so far, now it has now brought me to a total loss of 1.3 half. So currently now I'm on a minus, on my trading account. So I'm on a minus on my trading account of 1.3 half, and it was majorly because of this last trade I took. I lost 4.1 half. Imagine. So I over leveraged it because I had to scalp. I was looking for trading opportunities, and at the end of the day, I lost a lot of money. If I had lost just one half, it would have been fine. I'll still be on a positive, but I lost 4.1 half. Imagine. So my advice is, please, don't try to force trade. Whenever there is no trade opportunity, just close your chart, and that means you've traded for that day. Because no trading means that you've also traded. It's always good that you protect your capital at all times. It's always good that you protect your capital at all time. So that is that for that. So that is, or that was my so I've just been able to walk you through the trade I took this past week. So by the grace of God, we are looking forward to a new week, and this was where the market closed. And this is on Euro USD. You understand? So on this trade now, this was where the market closed, and the way it is now is as if we're having, the market is still bearish. The market is still bearish for the Euro USD trade. Can you see? The market is still bearish. So we are still having a bearish market. So now my bias for this new week is going to be this. Since this was where the market closed, so this was the last low and this was the last high. This is the last high. This is the last low. Please. So once the market opens on Monday, now my bias for the new week, once we have the price breaking out, once the price comes to take out this last high, can you see? Once we have the price coming to take out this last high, and we have a reversal that didn't take out this low here, and instead gets here and it starts going up, then I might want to to take a buy on this trade. You may want to take a buy on this trade because you can see here that we're having a low, high, a low, high, and a low. So this is a downtrend. Can you see? Having a break of structure, so lower low, lower high, lower low, lower high, lower low. So this is the last low, this is the last high. So once we have price take out this last high here, we have a reversal of almost 50% and below, and we're having a bullish intent there, and I want to take a buy. Don't forget, this price must take out this last high. You understand? The price must take out this last high. If it gets here, that means I won't be able to take a buy unless the price takes out this last high, breaks it. But if it gets here, in case it gets here, it doesn't take it out, that means it's still weak. That means I will still be anticipating a sell. So if it takes out this high and it gets here, and we have a reversal that is almost getting to 50% discount there, and it's now giving us a bullish intent, then I might want to take a buy. Understand? But if this doesn't happen, let's assume the price the market opened and we had a break of this last low. So if we have a break of this last low, then we have a reversal that probably gets to this place or didn't get to this low here, or probably gets here. And once I begin to see a bearish move here, then I want to take a sell from this place. So that's going to be my bias for the new week. So my fingers are still crossed. So I always wait for price to do its thing, then I can follow the price. I'll always be reactive to the market. I don't want to be proactive. So like I said earlier on, this is the last high and this is the last low. This is where the price is. So once price breaks out and take out this last high, and we have a reversal that doesn't take out this low and gets to 50% and below and start going up, so give me a bullish intent, I want to take a buy here. But if price opens on Monday and price takes out this last low, then that means you're having a new lower low, and we have a reversal here that didn't come to take out this, but it didn't get to this low here, but just got to this area, and then if it wants to start giving me a bearish intent, then I want to take a sell. So this is going to be my bias for the new week on Euro USD. But this is the currency I'm trading for now. Although if you look at my watch list, I have 7 currency pairs, but currently I'm on Euro USD. And if I get to the chart and I'm not seeing any opportunities, then I want to go to other currency pair, to see if I'm going to be seeing any opportunities on the pair. Alright, so this is where we are going to be ending today's class. So please, if you have not subscribed to my YouTube channel, I want you to subscribe and also turn on the notification button so that you always receive my videos whenever I drop it. You can share the videos also, turn it on, notification button, and also I want you to like the videos and also comment on the videos, your take home, what you got from the videos. And if you also have any question, drop it in the comment section. So I'm always available to reply to your questions. I'm always available to reply to your questions. And also, if you are looking forward to joining my one-on-one mentorship, you can actually send me a DM. You can drop it in the comment section. And I have my account that is linked on the page already. My Telegram, my Instagram too. So you can reach me on that for my one-on-one mentorship. Alright, so this is where we are going to be ending today's class. Alright, so I'm going to be seeing you on the next one. Bye.